As Wall Street gears up for Monday trading, crypto markets reflect the cautious tone seen in traditional finance. Bitcoin remains range-bound between 114T, struggling to reclaim its mid-June highs. Ethereum trades between $2,430 to $2,520, under pressure from a cooling derivatives market. Despite weekend calm, U.S. traders in New York are watching for fresh catalysts as macro uncertainty lingers. Macro Watch. The latest CPI report shows core inflation cooling to multi-month lows, a key signal for the Federal Reserve, FOMC. While the Fed held rates steady last week, analysts now price a 65% chance of a rate cut in September. Crypto markets are pricing this in cautiously. Rate-sensitive assets like BTC tend to outperform when CPI slows and Fed doves return. Traders also expect a new round of SEC enforcement actions this week, particularly around DeFi protocols with U.S. exposure. Stay alert. BTC Technical Outlook. Key levels to watch. Bitcoin has established a local support zone at 101.11.83T, with strong resistance stacked near the 104,030–106,330 AL range. Funding rates have turned neutral after last week's short squeeze, and open interest is rebuilding gradually. Key sentiment signal. Whale activity remains low, and spot volume is thinning, suggesting big players are in observe mode. If BTC breaks below 101,330, the next high-risk liquidity zone lies at 98.30–99,330 AL. Ethereum sentiment. London quiet, but eyes on ETH ETF. In London, institutional chatter continues around the upcoming ETH spot ETF ruling. SEC decisions are expected by early Q3, and multiple firms, including BlackRock, are adjusting filings. ETH remains resilient above 2430 AL, with minor inflows from U.S. institutions. However, a lack of momentum above 255–2630 AL continues to cap rallies. Funding, OI, and derivative signals. Open interest, BTC. 2.5% in the past 24 hours, led by Bybit and Binance USDT pairs. Funding rates, neutral to slightly negative across majors, indicating bearish caution, not conviction. Top liquidation zones, clustered at 104T2 and 106,430 AL, ideal for market maker traps. Options skew, leaning bullish in the July expiry window. Expect gamma volatility spikes near EOM. Altcoin highlights. USDC flows and token rotation. Circle's USDC saw a $68 million net inflow over the weekend, mostly on Ethereum and Base. Analysts believe this reflects risk rotation back into stablecoin strategies. As altcoin dominance softens. Notable movers. AR pumped 11% after securing a data integrity deal with a Newark-based cloud vendor. LDO gained on Ethereum validator yield speculation post-FOMC dovish signals. Doge remains stuck under resistance near $12.2 and $12 in the $30 Rs. Strategic signal, watch for Tuesday. Repositioning. As macro traders in New York and London align for week start, watch Tuesday for the real shift in derivatives positions. Monday is expected to be low volume, sentiment-driven. Liquidity thins post-Asia session, meaning any CPI FOMC headlines could cause outsized volatility between 7:30 to 10 a.m. EST. Stay ahead of smart money with Wall Street reawakening and CPI FOMC noise intensifying. This week is prime for stealth accumulation or sudden breakdowns. Whether you're in New York or watching from across the globe, keep your eyes on funding, flows, and the Fed. Because in crypto, the real move happens before the news hits CNBC. Next, macro events. Fed Chair Powell's speech, Tuesday 10 EST. ETH ETF filing update. Wednesday p.m. US PCE data. Friday pre-market.
If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research.